Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Marsh Mclennan Companies Inc. annual report. Marsh Mclennan Companies Inc. offers a wide range of businesses and services to its clients worldwide. The company's risk and insurance services segment provides risk management solutions, including risk advice, transfer, control, and mitigation. They also offer insurance and reinsurance broking, strategic advisory services, analytics solutions, and insurance program management. In addition to these services, the company's consulting segment offers specialized consulting services in areas such as health, wealth, and career advice. They also provide management, strategic, economic, and brand consulting services. The company serves a diverse range of clients, including businesses, public entities, insurance companies, associations, professional services organizations, and private individuals. Overall, Marsh Mclennan Companies, Inc. provides a comprehensive suite of advisory services and insurance solutions to help its clients manage risk, make informed decisions, and achieve their goals. Unfortunately, I don't have access to the text you provided. However, I can still provide a general essay on what might cause a stock price to drop. The decline of a company's stock price is often a complex issue with multiple contributing factors. One possible reason for a decrease in Marsh Mclennan Companies, Inc.'s stock price could be poor financial performance. This may include decreased revenue, increased expenses, or reduced profitability. Additionally, changes in the market or industry trends can also impact a company's stock price. Another potential cause of a decline in stock price is negative news or events surrounding the company. This could include scandals, product recalls, or other controversies that damage the company's reputation and erode investor confidence. Furthermore, regulatory issues or legal problems can also negatively affect a company's stock price. In some cases, a decline in stock price may be due to external factors such as economic downturns or changes in government policies. These events can impact industries and companies across the board, leading to decreased demand for certain products or services and subsequently affecting stock prices. Ultimately, the reasons behind Marsh Mclennan Companies, Inc.'s declining stock price would require a more detailed analysis of specific data and events. However, it is clear that a combination of internal and external factors can contribute to a decline in a company's stock price. The primary drivers of revenue growth and decline can be identified through a review of various factors. On the growth side, acquisitions played a significant role, with several major purchases made in 2024 and 2025, including Mercer and Marsh Management, consulting for $857 million. Additionally, contingent purchase consideration arrangements, based on EBITDA or revenue targets, contributed to revenue growth. The investment value of GROW increased by $258 million in 2025 compared to 2024, while the fair value of corporate stocks and government securities also saw significant increases. In terms of geographic revenue growth, the United States experienced a notable increase of 14.1% in 2025 compared to 2024, with an even higher growth rate of 22.2% when comparing 2025 to 2023. The consulting segment also saw revenue growth, increasing by $3,460 in 2025 compared to 2024. On the other hand, dispositions and exit costs were major drivers of revenue decline. Dispositions, including the sale of TCAS business for $25 million, resulted in a revenue decline of $164 million. Exit costs also contributed to revenue decline, totaling $18 million. Other factors that influenced revenue growth or decline include net investment income from private equity investments, which increased by $30 million in 2025 compared to 2024, and mark-to-market gains on other investments, which rose by $4 million in 2025 compared to 2024. Net income experienced significant fluctuations between 2023 and 2025. Initially, it increased by $315 million from 2023 to 2024 due to various factors. However, this trend reversed in 2025, with net income decreasing by $117 million from 2024 to 2025. Despite this decline, the overall increase of $1 billion from 2024 to 2025 suggests a positive growth trajectory. Profit margins also underwent changes during this period. The profit margin decreased by -1.6% from 28.4% in 2024 to 26.8% in 2025. However, it remains stable at 19.4% in 2025 compared to 2023 and 2024. This stability can be attributed to the increase in net income and foreign currency translation adjustments. The fluctuations in both net income and profit margins can be attributed to various factors such as changes in interest rates, foreign currency translations, and other economic indicators. Despite these variations, the overall trend suggests a positive growth trajectory for the company's financial performance. The company's financial performance is a testament to its ability to generate positive operating cash flow. According to the data, the company has seen an increase in operating cash flow from $4.3 billion in 2024 to $5.3 billion in 2025. This upward trend is further supported by the net cash provided by operations of $5,292 million and net cash provided by operating activities of $13,072 million in 2025. These figures demonstrate a significant improvement in the company's ability to generate cash from its core business operations, indicating a strong financial position. The company's debt level and interest expenses have undergone significant changes over the past few years. As of December 31, 2025, the total consolidated debt outstanding has increased significantly to $19.6 billion. This increase is largely attributed to the McGriff acquisition, which has resulted in a substantial rise in debt levels. However, it's worth noting that there have been some fluctuations in debt levels over time. For instance, short-term debt saw a 143% increase from $519 million to $1,267 million, while long-term debt decreased by 6%. Additionally, the company repaid $500 million of senior notes at maturity in 2025. In terms of interest expenses, there has been a notable increase of $382 million, 66%, from 2023 to 2025. However, interest expenses did decrease from $497 million in 2024 to $403 million in 2025. These changes suggest that the company's debt level and interest expenses have undergone significant fluctuations over the past few years. The performance summary reveals a mixed bag of results across various regions and segments. On the positive side, Illinois, North Carolina, New York, and the United States demonstrated strong performance, with increased revenue in 2025. The MMA segment also performed well, thanks to its acquisitions in these states. In contrast, the UK, Luxembourg, and Netherlands showed poor performance, with decreased revenue in 2025 for the UK and no specific data available for the other two regions. The Mercer segment had a mixed record, with acquisitions in several countries, but a disposition of businesses in the UK. The consulting segment also experienced both highs and lows, completing 7 acquisitions in 2024, but showing poor performance overall. Meanwhile, the risk and insurance services segment struggled, indicating a need for improvement. The management of the company is optimistic about its future prospects, as evident from various strategic initiatives and risk management measures. One key aspect of this positive outlook is the focus on returning value to shareholders through dividend payments and share repurchases. The authorization of a $6 billion share repurchase program and the declaration of quarterly dividends demonstrate the company's commitment to rewarding investors. The company also appears to be proactive in managing its risks, including foreign currency exchange rate exposure and goodwill impairment. This is achieved through the use of forward contracts and options, as well as regular assessments of goodwill impairment. Furthermore, the company's defined benefit plans are diversified and managed to maximize returns within acceptable risk parameters. Overall, the management strategy seems to be centered around creating value for shareholders while minimizing risks. The company's positive outlook is also reflected in its investment strategy, which includes commitments to potential future investments in private equity funds that invest primarily in financial services companies. The company has made several significant acquisitions and divestitures over the years, shaping its business landscape. In terms of acquisitions, the company has expanded its operations through 3 notable purchases. The first acquisition was McGriff Insurance Services, LLC, for $7.75 billion, which significantly enhanced the company's insurance capabilities. Another key acquisition was Girolamo Holding S.A.R.L., also known as Cardano, although details about this transaction are limited to a single-page reference. Additionally, the Sedgwick Group was acquired in 1998 further broadening the company's scope. On the other hand, the company has also divested certain assets through strategic sales. One notable example is the sale of River Thames Insurance Company, Limited in 2001. The company has demonstrated a commitment to returning value to its shareholders through two key initiatives. Firstly, the company has paid dividends to its investors, providing them with a share of the profits earned by the business. This is evident from the information provided on page 50. In addition to paying dividends, the company has also taken steps to reduce the number of outstanding shares in circulation. By buying back shares, the company has effectively increased the value of each remaining share, benefiting its investors and enhancing their overall return on investment. The details of this share buyback program can be found on pages 47 and 61. That concludes the financial summary for Marsh Mclennan Companies Inc. Feel free to comment below, and I will be happy to answer them when possible.